Welcome back, traders. I'm glad you're here today. In this short video today, I'll show you how to implement the 50 EMA plus RSI hidden divergence plus Fibonacci retracement tool to execute profitable trade setups in the market. This trading strategy combines two powerful trading indicators that can be confirmed with the aid of the Fibonacci retracement tool to detect high winning rate trading setups in the market. How can we implement the 50 EMA plus RSI hidden divergence plus Fibonacci retracement tool for a trade setup in the market? There are 4 factors needed to approach this trading strategy. 1. First, we need to see a price pullback to the 50 EMA period. 2. We need to apply our Fibonacci tool to see if the price pulls back to the 50% or 61.8% retracement level. 3. We need to see a hidden divergence formation on the RSI indicator for potential continuation of a trend. 4. We need to see a confirmation of a bearish close of candlestick below the 50% or 61.8% Fibonacci retracement level in a bearish trend, or make an entry when we see a confirmation of a bullish close of candlestick above the 50% or 61.8% Fibonacci retracement level in a bullish trend. Let's see how the 50 EMA plus RSI hidden divergence plus Fibonacci retracement tool works for the continuation of a bearish setups. Here's an example of a strong bearish trend here. After a bullish pullback to the 50 EMA, we can go ahead to apply a Fibonacci retracement tool from the low high here to the lower low swing here. We can see price found resistance at the 61.8% Fibo level here. And there was a bearish candlestick below the 50% Fibo level and 50-period EMA here. In relation to the RSI hidden divergence, we can see the formation of hidden divergence. Hidden divergence simply means the transformation of highs or lows, which is opposite to the swing's highs or lows on the price chart. We can see price carved the low high at the high here. Same low high occurred at the next swing of the 50% Fibo level and 50-period EMA here. But the RSI made higher high in relation to the low high zones on price here. This is the opposite direction in swing between the price chart and the RSI. This formation is called a hidden bearish divergence. We can see how the hidden bearish divergence gave confirmation of the continuation of the bearish rally. The crossover of the RSI indicator below the 60% the RSI index level confirmed the sell entry setup. We can see how the trend went in a strong bearish move downward. Now let's see how the 50 EMA plus RSI hidden divergence plus Fibonacci retracement tool works for the continuation of bullish setups. Here comes a bullish trend. We can see how price made a bearish pullback to 50-period EMA here, and there was instant bullish rejection upward. This bullish rejection resulted in the formation of a bullish engulfing pattern. Let's apply our Fibonacci retracement tool from the last higher low here to the higher high swing here. We can see the 50% and 61.8% Fibonacci retracement level acted as support for price at the level of formation of the bullish engulfing pattern. In relation to the RSI hidden divergence indicator, we can see that the RSI formed a lower low, which is opposite to the higher low swing formed on the price chart. This formation is called a hidden bullish divergence. We can see how the hidden bullish divergence gave confirmation of the continuation of the bullish rally. The 50 EMA plus RSI hidden divergence plus Fibonacci retracement tool trading strategy is an effective and highly consistent trading strategy that can be applied on any given time frame. As a beginner, master the continuation setup trading strategy before proceeding to the reversal setup. Looking forward to seeing you in the next video. Peace.